So I'm going through my hard drive and I found loads of videos, and I'm going through the process just sorting them out and stuff, and thinking there's probably quite a few I could publish that would be helpful to users. But this is one of them I found. It's only a small part of the screen. It's of basically the trading that I'm doing. It doesn't show many other things like the charting, but generally, it's a good example of how I'm getting in and out of market. So you can see we're in this market. We looked at the chart. It's being backed in. Money's at 224. And we haven't done anything yet. So we're looking at this money at 224 thinking, well, the price is being backed in. If that gets pulled or gets taken, then we'll jump into the market, which is what we've done. So we've put in a couple of stakes here. We put in 2 lots of 500, I think. And you can see that that's gradually been matched. And what we're doing now is we're looking at the unmatched money on the back and the lay side, and we're also looking at the traded volumes. If you look on the right of the ladder on BetAngel, you'll see the long-term traded volume and the short-term traded volume. So we're using that to pick up on short-term activity and where that's going. So we can see here that that's been traded between 216 and 228, and there's loads of money sat down on the lay side there that may hold up the price activity, so we're keeping an eye on that. You can see we've put a closing trade in at 204 there, so we're just doing that in anticipation that the price may reach there. And then we're just watching where the short-term price movement goes. So we can tell by looking, I can tell by looking that where money's getting matched very, very short-term is giving us an indication as to where the market's pulling this runner. So we can see that the market's gradually pulling this runner in all of the time. Yes, it's sometimes stalling and going back up, but predominantly it's coming in and coming in. You can see that confirmed on the right-hand side of the ladder here. There's an accumulation of money between 2 and 208 there, so you can see we've put a few orders in amongst that. So this is a key level that's developing in the market here. Basically at this point the market's stalled. You can see the volume at 210, I don't know what that is or why that's come up on the screen. We can see the money at 210 here that's been matched, and there's been very little match below it. So for the market to continue on its trend downwards, it has to get through this money, and that's what we're looking for now. We're not too fussed about what's going on above it. There's enough gap here between when we got in the market and where we are to not have to worry about that, but we are really focused on what's going on the left-hand side of the ladder here. So money at 212 there, not much else above it. This could indicate that the price is going to start heading back up. So you can see we've just closed our position a little bit. We've just taken a little bit of money out. That gives us a little bit more breathing space, and we've done the same again there. So we've got rid of about 250 quid of our £1,000 that we had in the market. And you can see we wouldn't lose money really unless we went up to sort of 230, 232. So we're fairly comfortable at this. We can hold our position. I'll be looking at other things around the market at this stage in this trade, trying to understand what else is influencing the price here. Is something drifting dramatically? Something coming in? What's happening? And is that telling me that it's going to stay where it is, or that our position is deteriorating? Because if our position's deteriorating, may as well get out. But if the position looks okay, we can just sit there and hold it. So the closing positions I've got in the market here, I can let the market take those, or I can cancel those positions. There's a little bit of support on the other side. You can see the money's getting matched on the right hand side of the ladder here as well. And it's just a question of dribbling back in the money that we placed on when we first initiated the trade. So you can see the sudden surge of money. The money's really come for this at this particular stage, and suddenly all of those bets have been filled. So maybe we should have been out of that, but that's fine. A profit is a profit. Now when it reaches 2s, you can see that's highlighted on the ladder, and when you see this highlight, that's typically a resistance point in the market. That's where the market starts to play funny games, and you'll find that at this stage in the market you can either initiate a position or exit one, because it could bounce from this position and head straight back up, or it could go right through it and then it will accelerate quickly downwards. So at this stage of the market we're pretty much out. You can see we've re-established a position because we can see the favourites continuing to be backed, and therefore we've tried to jump on the back of that. So we're saying, okay, it's reached this resistance point, it isn't bouncing back up, and therefore we're going to go for it. We're going to see if we can get some more money on it. Now unfortunately we missed it on that occasion, but you can see the impact that it had here was that the price did go through that, got matched at various prices below there. But our trade is pretty much over now. We wanted to get on and get some more money in at this particular stage, but we missed the opportunity and we've closed our trade out. So we initially started a bit further up the ladder. We backed for the best part of £1,000. We dribbled those orders back out of the market, and then when it reached this resistance point in the market, we tried to jump on it. We realized that we'd missed it, and then we closed our trade. But this gives you an illustration of what a £100 swing trade would look like, and this is fairly typical of the way that I trade. And it's not jumping in and out repeatedly, it's making a broad assessment, holding your position, and then gently easing yourself in and out of the market. So anyway, I hope you find that video useful.